All right, let's jump into it. Where we at? 16 past 9 on Wednesday, 20th of May. And look, I'll just sort of kick off with gold here because this thing's traded absolutely, you know, from a technical point of view, just beautiful this week. Obviously, sort of weekend wise and that, just a recap. I know, so obviously we sort of follow this thing every couple of, well, every day, but early push down, took out the stops down here, dragged in a whole bunch of shorts. I said at the time on the weekend video, have a look at it. It's sort of like, the profits aren't these people. These people are getting here. Oh my God, did you see? Gold's going down. They short it first thing Monday. They're right for a minute, then they're wrong. Comes up there. I said yes yesterday that sort of like, this move just up through here, this bounce up through here. This is just squeezing these because if you look at these levels here, this is on the 4 hour, but put your textbook says put the stops there. Textbook put the stops there. Did it even get it? Look at just an absolute sniff past those highs there. Yesterday, I when I was doing this, it's funny because again, it's not. I don't know if these things are actually that funny, but it just seems to be how I sort of say this. Anyway, whatever. This was a big blue candle, remember? And I said, look at this. It looks like it will potentially taking out this zone here. If it does, where's it going? This is where I was looking for, should this candle have stayed a big blue candle? But I also referenced this candle here because at the same time, well, not at the same time, but at one point in time, this was a big blue candle. What happened? Came down, flipped, and continued in that direction. Obviously, this being a 4 hour candle, we had I think two hours 45, 2 hours 50 or something left on the 4 hour candle yesterday when I was doing that video, and I said, look, keep in mind if the sellers are still around here, cover it across, boom, boom, there's the sell zone. We know where the sellers are. You can see where the sellers are. They were here 2 seconds ago. They're over here as well. So we know that the sellers were here. Had this sort of closed bullish, this would have been the short side position here. But as you can see, sellers, every time they've had a shot at this level, bang, pushed it, flipped it, and then what did we get? We got a nice sort of continuation pushing back down lower. So that was a very good sort of trade yesterday. On top of that, we had the Fibonacci pretty much rejecting, as I said, take the highs, take the lows, drag it up, 38% retracement, which we know is a 38% retracement is a strong continuation level. Minimum, you're looking to retest the lows, which is around this level over here. This is actually your daily supports level, which I'll get onto the daily chart, daily time frame in a second. And then obviously sort of closed down underneath and it's kind of dribbled down last few hours. Well, actually pretty much all through the US session. They didn't really grab it and run it and that. But it'll be interesting to see today because, again, look, if we jump onto the daily, that's pretty much a close down outside or underneath these supports here. So you've got a little bit of a zone through here, as you can see, sort of like, once upon a time, support, resistance, resistance, support, resistance. So, it is slightly sort of justifiable. Well, justifiable, you could slightly say, hey, look, there is a very small little area of interest from the market around this zone here. And as I say that, I wasn't even looking at these ones. I was just looking over here because we're not trying to reinvent the wheel. We're not trying to say, hey, look, there's no zones and levels don't hold forever. But you can see here, pinpoint. You can, whoops, okay, let's be on a different time frame. You can see here that it stopped here. Once it got under, they tried to hold it under here, chopped around it a bunch, and they obviously used it as a bit of a launch pad up here. Now, this I don't see as sort of like a, oh my God, this is the bottom kind of level. This isn't what this is telling me. This is just telling me that there has been some little sort of chop and change previously, and this was going back to when we had that absolutely mammoth sell down. Look at the size of that wick, just like a $300 wick. Jesus. That's on a daily, of course, but still. Excuse me. There's an area of interest through here. The fact that it's then sort of come back down here, and as I said, I was looking at this, and then you sort of drag it across. Well, what did the market do? Sort of, was this Monday lows, push it back up. Here we are down again, and we're obviously sort of sitting around here at the moment. So I think that's all very well that we could have this as a bit of a zone. What can I do? Settings. This one here. I make it just a little bit of a lighter. What can I do? I don't want to draw too much attention to it. So look, it is a zone, but it's just a very minimal kind of zone. You know what I mean? So it's not really something I normally sort of mark in. I'm just using it to emphasize the point and some sort of reason why we might be seeing a little bit of a stalling around this level here. Um, what to me I would say is probably more important is probably this more recent zone here. So you've got previous areas here where the market sort of has danced around with it, but again, that's going back to late March. We're sort of coming into the later part of May, so 2 months ago. It's back down here again. This is the more recent price action that I'm interested in it because you've got buyers here, you've got buyers here, enough to launch it all the way up over here. Came down here, had a shot, came down here, managed to push back up above it. So that's telling me that the market, every time it comes to 4,500, give or take a couple of bucks, they push it back up. Have a bigger one, double bottom, pushed it all the way back up. Comes down here. Oh, great, I've got another shot. But well, the fact that we closed underneath this level, I think is pretty much a sort of to me, it's sort of saying that, okay, we've got a depletion of buyers at this level here. Because if you think about it, every time they pushed it back up, they pushed it back up. Even here, pushed it back up. This time, they've allowed it through. So although it's sort of stalled at this point here, and this is some sort of you can see a little bit of chop change back over here. Previously, I don't think this is going to be, okay, that's it to stop. I think this is more important, this structure that we're in here right now. And if this is to take out, this will be obviously sort of confirmed down underneath 4462. So I'll put a little alert there. 4462, so that's previous D1 bottom wick, continuation lower, and then realistically under here on a daily time frame. So obviously, you get chop change up and down and this kind of stuff. We'd probably be targeting maybe this wick down over here, which is about 44.20. So I'll be targeting 44.20 should that sort of lower wick there break. And then you can sort of add a couple of other bits and pieces into this. If we look at the fact that the RSI, obviously coming back down here, is it so showing a sort of bottom? Well, not at this point, of course. But we could sort of potentially see this thing push back down into this oversold area a little bit more. See what happens when it comes down here. Oversold can stay oversold for a little bit here. And then obviously sort of that was even a very small negative divergence, as you can see. This low is lower than that low, but the RSI is actually higher. So there's a very small negative divergence there. This to me does not say that, hey, we're just going to spin on a dime and go up. Anything's possible. Given this chart here, where's this? Oh, saying it's over from 98. I don't know what. Maybe that's coming from. Oh, that's 3 hours ago. So it's a different turnover. Just trying to match it up on the on the chart that I trade. Yeah. So I don't know, 5 o'clock or something like this potentially. Anyway, regardless, point is that I think we've got a depletion of buyers at this level. We've closed down through here. You could potentially see this thing come up and put a little top wick here, so maybe a test of 4,500, potentially a test of 45 to 45.10. But I think realistically, should we get up into there, there's a good chance we just do a bit of a rollover. And then, as you can see, this is the 4 hour as well. It doesn't have that top wick there. Of course, this is the same 4 hour and what's it called? 4 hour and daily's got the same sort of start point there at that night for 44.98, as you can see. I would say that most likely, definitely confirmations down underneath that wick. And to me, it looks like a pretty sort of clean little move down to 44.20 zone. All right. All right, just have to type up the notes there. One thing I'll just sort of point out just before I push on as well is this sort of thing, because I'm going to sort of show it on silver as well. This is the Fibonacci, which I touched on a second ago. And I said that sort of like the Fibonacci, the retracement is what tells the story here. 38% is strong continuation. This in conjunction with the RSI on the 4 hour, RSI on the daily, closing underneath daily supports, rejection came from 38%. That all sort of paints the picture of lower still to come. And again, you got to understand sort of what is actually happening. It's all very well to go, well, this is the technical thing said this. Okay, what does it mean? That's what you need to be able to unpack, and you need to be able to sort of put almost a story to it. That the buyers are pushing it up here, and I said this is the short squeeze, kind of late people coming in. That's great, all very well. But why did the sellers come back in here? You know, why didn't they sort of go, hey, look, if I want to sell it, why not try and sell it at a better price up here? And the sort of people are getting out here. Generally, they're getting out here lower and quicker because the thing is, it's coming down here. I've been long, whatever. Maybe I was long from here, whatever. They want to get out of those positions as quick as possible. It'd be nice if it could get up here, but it comes to 38% and they're like, look, that's good enough for me. It's going to 4,400. It's going to whatever, 4,000. Okay, we'll get to that when we get to that. But you know what I mean? It's going lower. Why do you get out at 38%? Because that's about the best I'm going to get. Okay, let's get out, let's get out. And Group Collective of the market got out of that move there, and they've sort of pushed it down. So, like as I said, if it came to the 61%, it could still definitely sell down. It could come up and retest the lows over here. It could still come down. But the higher you go, the higher there is, you got to think about it, the more demand there is pushing the market up, the less willingness people are to sell straight away. You see what I mean? So it's sort of like the higher you go is like the more that the buyers are willing to sort of give it a shot, give it a shot, give it a shot. Buyers just aren't. They're like, well, you know, if this thing's going to 4,200, I'm not going to buy it here. So the demand weight falls out, and the buyers just aren't there to push it. Sellers are going, oh, well, maybe I was long here. I just want to get out no matter what. And by sellers, I mean sort of like, you know, maybe they were long from up here and they've got it wrong and they'll wait to see if this is just a big bounce shakeout like we've seen so many times before. But the confirmation that sort of like, you know, obviously went to 38%, now has taken out the lows, paints the picture that we probably could be coming a little bit lower. Well, paints the picture definitely we came down 90 to sort of we came down 130 bucks from that retracement level yesterday. So yeah, that's just a little bit of the old Fibonacci there. All right, flick along. We got silver. Silver also breaking down underneath those lows, closing down there. Now again, it's stalling a little bit at those bottom wicks over there. So it's not necessarily like let's see what happens. It is. Let's see what happens. But it's not necessarily that this thing's bucketing down here, moving up over here. The fact again that it's closed under here, retested this, need to take out this low. Excuse me. Previous day one low, yeah. And this pretty much again, look, if you look at this with the fib here, I was saying yesterday that maybe we didn't even get up to the 38%. They smashed it down and they've smashed it down again. Look, this thing, the fact that it's stalled here, this is on a 4 hour. So we've got 1, 2, 3. We're in the fourth one now, or almost halfway through this 4 hour candle, is holding this zone. Now, it's a bit tough to call with this because it is just a bit of a, I suppose actually this was US session, but right now is a bit of a tough sort of time of the day. But you can see that certainly, you know, they sold it through Asia yesterday. They sold it through Europe. And then the US were like, okay, let's just hold a point and sort of see what happens here. So I think it'll be interesting. What will be interesting to see is if Asia continues to sell metals. I put a post up last week, sort of saying that you know Asia has just been pumping metals down for the last couple of weeks, sort of through the Asia sessions. I'm seeing gold push up a little bit here, 44.90. I want to see what happens around 4,500. Where we at 9:30. Anyway, on with silver. So RSI here, look, this thing could very much just stall. If it can get back up above 75.25, I'm going to say, so I'm going to move this one here. Don't need this one here. Put that here. Change the message. 75.20. Back up into, no, it's not back up into the range. Back up above supports. 75.20. So back up above supports, if we can get back up above 75.20 and that, and you could see this thing sort of recover a little bit. The RSI when it's like this here, and this is the same sort of thing I was saying with gold a moment ago, like it's got the ability to obviously bang continue down here. So if we flip this and come down here, then I would say we're most likely coming down towards this sort of 70 level. But you have to sort of see what happens there. I think these are very crucial, these two little levels that I've just put in here now. Because should this put in a big bullish candle, this RSI will turn up. Let me draw it out a bit. There's a little arrow. This would turn up here, won't necessarily go all the way, but move in that direction. Then, all of a sudden, you'll have a negative divergence. If that is to put in a big candle there. And this is what I was sort of getting to when I was saying, hey, look, this is going to be interesting here. Because it does have the setup here. It's stalled for, like, what's this, almost 10 hours or so now at this level. Put this on here. Is this come down here? This down here. If it turns up here, it's going to turn into a negative divergence, which has the ability then to probably sort of push a little bit higher, and we could come back up into these sort of 75, 76, 77 areas. I mean, negative divergence we know are a good sort of bottom. That's not my base case. That's just a consideration in my opinion. But I would say that sort of more likely this thing will sort of either, if it can't get above these highs here, what we're going to see is kind of, it's got like a, not really like it here, but it is kind of like called a waterfall. So it's like it comes down, it'll just dribble, 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 lower high, lower high, lower high, tight little bodies, blah, 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 and then you'll get another big fast leg down over here. I do think, should that happen though, should we get a move down to, 71 or so, that would be the end of this sort of kind of move for now. I don't think we're about to get a meltdown through here. I don't think it's set up like that at the moment. I'll explain that with the dollar in a moment. I do think that there is potential to come down over here, but I just don't think it's happening in this move. So for silver, I think the directions are for this session are pretty much clear cut. So I'd say down maybe underneath here, direction, and then up above here, with each of these targets being here or being here. I don't think we're going to about to sort of see that's it for the metal sell down. I mean, there's a reason why all this stuff's just been hammered. I mean, you can unpack it any which way in that, but I think obviously sort of yields going through the roof is not not particularly good for the metals and that, and obviously dollar being more on the bid, not good for the metals, and dollar and yields working together in tandem as they kind of do. I think is something the metal market needs to be wary of. Because if you think about this as well, like, when back last year, when we had yields moving up, but the dollar wasn't responding, metals just kept producing, even though they were offering a higher yield for the dollar. So it was kind of like, okay, well, this is a bit weird. It's a bit odd because, like, a higher yield for with the interest rate, particularly the tens, should generally garner some interest in that currency, but it wasn't, and that was very odd. And metals kept going higher and higher and higher. But this time is a little bit different. This time's different. Yeah, I know it's a fun saying, but the thing is, it's sort of like with yields actually and the dollar actually offering a potential place for people to sort of pop their capital. So I'll just check in the market at the same time. All of a sudden, the metals has something to contend with. Last time they didn't like the dollar when the yields was going up because the jobs market was so bad and everybody was calling for multiple cuts towards the end of the year. Why do you want to buy a currency if you're looking at potential multiple cuts through the year? And that's not the case so much anymore. They've definitely pulled back on the sort of like the dovish kind of attack or sort of direction with it all. and potential talks of hikes kind of on the cards. And this is the thing as well, and I was jumping all over the place here, but this chart, is it this one? Oh, that's the DXY chart. 55 charts here. No, I'll get to that in a moment. There's the DXY there. DXY has disappeared. Alright, it's gonna be this one. No. Alright, cool. Anyway, yeah, scrap the last 30 seconds. Scrap the last 30 seconds there. What chart was it on? Okay, whatever. Anyway, look, I just wanted to show a chart basically of sort of the dollar sort of positioning for a big cut. It was kind of like through this, no, it wasn't through that period there. It was like through this period here. Basically, this is back in September 24. This is where they cut 50 base point. It was like, I think it was like one of these, if this is a daily, it was like down here. I think it was one of these ones down here. But the thing is, and this is why, this whole point here, the market was talking about potential cuts and the dollar got slammed. What happened when they actually cut? Well, look at that. And it doesn't mean that you'll always get such a sharp reaction like this, but it just means that the move, look at the size of the move prior while people talked about it, and then the actual move, even if you disregard the move afterwards, look at the actual move when the cut came. It barely registered. Like the market had already positioned. And this is what I'm talking about with gold this week. And it works on all the sort of time frames. The profit doesn't belong to the person that, that clicks on the thing and said, oh, did you see they cut 50 base point? No, it belongs to the people that sort of position themselves prior to the fact. Anyway, got a little bit distracted there. Let's get back onto what we're doing. So yes, what was I saying? So yeah, so I think particularly with silver here, has the potential if this does find a rally to be a negative divergence, which then could springboard it up into those 77s. However, all things considered, does look like this is probably just going to dribble along here and then potentially come down towards that sort of 71 level. All right, well, I'll crack on a little bit quicker here because I always say this. I'll make this one a quick one and then, of course, we sort of fly along with it all. I think this is the all-important one. This is the dollar, in my opinion. I think that, we're potentially about to sort of see this thing close this gap finally. This is what I was saying yesterday. That sort of like, well, actually, over the weekend, I said a move down here is seen as a buy the dip. Okay, yeah, back, cool, we got that. We can see that previously we had a little bit of resistance here. Little gap down on the dollar here. This is a pinpoint. And we can see that obviously that sort of carried across and we've got a little bit of support around that zone here as well. So that's where we sort of saw this thing rally back off here. Again, this is what we want to see though. We want to see the gap actually close. The gap is at sort of 99.50 and I think we're going to get another push down over here. So how does it sort of relate? It means that sort of like, and this is what I was saying yesterday, dollar up, gold down, that's what we've seen. If this can sort of rally itself up, I think this is, and this is why I sort of say, I think we're in the last leg of this particular move, because I do think that if we get one more push on the dollar here, everyone's going to be gung-ho going, yeah, the dollar, the dollar, the dollar, but gap closes. Look at what happened when we closed this gap down here. Big reaction. Now, it doesn't mean that we're going to get a reaction this size and it's going to come back down over here, but I do believe it will see a reaction. I don't know why I don't have an alert back up over here, but let's put this here. Change the message. 99.50. Closing gap. Bank on metals. If I'm holding him there, certainly at least something. I don't like this RSI on that last push though. This is on the 4 hour as well. But anyway, let's get rid of all this just so we can see what's going on. So I do think this is so close that I'd be surprised if it didn't hit it. Obviously, as you can see, so the last couple of hours of the session, drove up here and then it sort of, whoop, stalled, just took out the highs, stalled, just came down here. one more big sort of hurrah push up here, push down on metals with that, get everybody nice and sort of trapped in, thinking that that's the whole move, and then sort of reverse it back. That's my play. That's what I'm thinking. That's what I'm sort of saying here. I think we're just too close to this target to sort of leave the job undone. It's not like it can't. Certainly took out the high here. The RSI doesn't look great on it. But I just don't think enough has just changed within that to sort of say that, okay, now the dollar's come back down. It could happen. We could, I mean, look, as I said, as that stands, it is looking a little bit sort of even very slightly above higher. It is still technically a negative divergence, which isn't particularly great, of course. But I just don't think that maybe one more hurrah here and then maybe a deeper correction back down to 98. As you can see, this kind of path that I'm looking for here. Back move to over here, and then another bigger move here. So I think overall, I don't think metals are done. I think metals potentially have the chance to go much lower because this is the big make or break time for us with the dollar. So, but as we know, the cutesy little saying, nothing goes in a straight line. Well, no, it doesn't. And as I said, once this thing's closed, well, that's that done. We can move on. We can look, okay, what's next? But as it is at the moment, we're kind of sort of sitting here in limbo. So negative divergence does have the chance to see a little bit of a pull down here, which could get us at that little bit higher on the metal. So as I said, I was looking for what happens at 4,500. We went up to 45.96 or 45.95.95 at the moment. But I just, as a general sort of theme through the session, I think that some stage today we'll see this gap close. When that gap closes, I think then you'll get a bit more of a sustained pullback because, yeah, we got the little pullback down here. Was this on Monday or Tuesday? Yeah, sort of Monday night. Obviously, as you can see, they just rallied it through Asia. Maybe they rally it through Asia again, take out all those lows, trap a few people in shorts, then squeeze them. Do the same sort of thing we kind of saw on the Monday potentially. That's just my sort of feeling with it all. All right, and final sort of go and just have a look at Aussie. Aussie's playing quite well. Nice sort of rejection from sort of getting down under here. And again, this is that sort of thing that I'm talking about, similar with silver in the sense of this is like, it's all very well to have this big pushback up here, but till you can get back up above, say, 71.25, above these wicks over here, then you could see this again. It could be turning into, if you look at this, a bit of a negative divergence. Because a pushback up here, i.e. sort of dollar sell off, would sort of see this thing sort of come up here, negative divergence, boom, boom, springboard, come back up towards 71.50s, 71.57. That's not the base case. I think this is probably more minimum going to fill this wick down here at 70.80. This again goes in line with potentially some short-term sort of strength with the dollar. If we do come down here, I wouldn't be surprised. It's a bit of a tougher call. Like as I said, with this thing on a daily, let's get onto the daily here. Negative divergences, and I said this on the weekend, they don't get resolved in one or two candles. In my opinion, you're really looking minimum 9 candles, but to be a little bit safer, I said 8 candles. Based on this sort of time frame, this negative divergence. And yes, you could say, hey, well, this was that. Oh, wait, no, that's that high there. This is the negative divergence here. And really, we've had, say 1, 2, 3, 4, 5, if you want to count this one. This is the wedge break. This is the bounce, lower. We are still holding this support here. Again, take out the lows. Yesterday's lows was going to see continuations. It's only Wednesday. Tuesday's lows. Continuation lower. Now, I do think all these sort of directions will play out, but I'm open to the fact that they could try and sort of stuff with the people a little bit first. So, maybe a push back down here, maybe a push up, retest this level here, 71.10, and then sort of a move down. So a little lower time frame move such as this to get down there, with the overall theme being this move coming down here. So I think, it's look. Again, it's just how these things sort of work together. None of this stuff's a gospel. It's not like it's going to close the gap and bang, we're going to see sharp reversals. It's just playing the likelihood and basing it off what we've sort of seen, how these things, everything acts a little bit different in its own way. But generally, closing gaps are a good target for things. Certainly are for the dollar. And if we see it close the gap, most likely we're going to see a bit of a pushback. This would be the pushback over here as the market profits from dollars. Yes, Aussie's not part of DXY, but it is. Think about DXY as a barometer, general market consensus, and feel towards the dollar. If they're selling the dollar against the euro, the pound, the yen, are they not going to sell it against the Aussie? No, of course they are. So, you'd see a pushback up here, dollar comes back down, and then maybe we see continuations further lower there. But to me, if we get back at least on the 4 hour, this is the kind of waterfall thing here, where it goes dribble, 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 and if this gives way, we just go and push down. So yeah, I don't know. I'm reluctant to buy any of these things at the moment. I think the dollar's certainly stepping into gear, and I think that these are very much sell the rip situations. Hence why I was shorting here yesterday. Cool. That's about it for Aussie. Just typing up the notes, but I should sort of think, okay, if this is confirmation, where are we going? Oh, you could say it's hard when you've got these big gaps. For a long time, I was doing this on the Monday. I bet it was a Monday. Yeah, it's a Monday morning. Aussie did this for a while, and I'd say gap down, push up, kind of thing. Anyway, I would say possibly you're looking around 70-30 here. 20s we know is a fairly common level, reoccurring level with most cent marks on Aussie. Put this go to backwards, it's a natural zone. I would say that's probably where we'd be looking for. Should we take out that wick there? So take out 80. You might get something like, again, nothing goes straight line, yada yada. But I would say before you get an actual sustained bounce, you're probably looking in this kind of area over here. So yeah, between 70 and 70-30, and then possibly see a bit more of a sustained bounce. Should we get down to that level there? And that's obviously confirmed underneath 77. All right, so that's about it for the charts. I don't think we've got much data coming out today either, do we? Not really. Let's reload this. I don't think there was anything much overnight. You got a couple of Fed speakers, boring stuff. We got ADP's up. Yeah, and this is another thing. I mean, ADP weekly, I honestly haven't actually been paying too close attention to it all, but that's obviously sort of government jobs and that weekly on a weekly basis, which is a new thing this year. And you're beating market expectations. They're all pieces of the puzzle that you put together. And if jobs aren't an issue, if inflation is an issue, well, what do? Well, they'd most likely be in the hawkish hike camp. All right, let's move through. We've got absolutely nothing through Asia. There's China data coming out, and that looks like they're just sort of holding the 1 and the 5 year flat. CPI out overseas. It's very interesting that these guys are sort of having such low expectations of their inflation. Aren't they going to be smacked with all the sort of oil inflation stuff, or is that just America and seemingly Australia? Crazy, because I think Euro's the same as well, aren't they? Yeah. Not really not a budge on there. I mean, core strips it out, I'm pretty sure, but still, the headline year on year should still be a bit higher, you would think. And then sort of 4 a.m. we get the Fed minutes, but again, most of these things we hear so many Fed speakers all the time. They don't really it's nothing super new with it. All right, that's it from me.